Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our live feed. We'll have your queries addressed by our technical guest later on in the show. But before bringing them on board, let's see what the global handover looks like. US stocks close a volatile session lower as fears of stringent COVID curbs in China rattle investors. Asian markets are mixed amid reports that the Chinese government has urged banks to boost credit support for its flagging economy. The SGX Nifty, meanwhile, indicates a muted start for the Indian market. Meanwhile, European markets yesterday remained muted as investors continued to assess inflationary pressures and the possible trajectory of central bank interest rates. On the domestic front, Zomato sees a series of high-profile exits in recent months. How worried should investors be? Stocks in spotlight today: Nykaa, Bluestar, Delhivery and Adani Enterprises. All right, let's get going and talk technicals first with our guest on the show. I have with me Himanshu Gupta from Globe. Thank you so much for joining us, Himanshu, and great having you on the show. Let's talk about how the setup is looking like and what kind of a session should we brace ourselves for. It's also the expiry week. So tell us what could be in store.
Very good morning to you. Well, I think past 3 or 4 trading sessions on the markets, in the broader markets, have been a consolidation mode. And if I talk about Nifty first, we have seen the markets actually giving some kind of confidence and some kind of gains after we hit that 18,400 odd levels. Now, over last 3 or 4 trading sessions, what has changed is that the FIs have been shorting their index futures positions, which is the first alarming sign in a while for as of now. And as you just mentioned that this is an expiry month rather, so there can be a volatility today and in the next couple of sessions as well. Now, to make the context of all this setup, we are still above the crucial short-term moving averages. That is, 20-day moving average for Nifty is placed somewhere close to 18,080 odd levels, and we are still 18,150 as per the yesterday's close. That's one thing. After 2 days of consolidation, the PCR has also shifted to some kind of a comfort zone, and it has come to below 0.80, which is again a confidence. And last but not the least, in the November month, we have seen a huge gap up somewhere close to 18,100 odd levels. And my sense is that this is the last level which the bulls will try to defend, which is around 18,100 odd levels. So the way I would like to approach today's trading in Nifty is that 18,080, 18,100 to me looks like a very important support zone, where not only from a technical charting perspective, multiple supports are there, but also from a derivatives perspective, put writing has also seen from 18,100 and 18,000 odd levels. So I think one can initiate longs around 18,100 odd levels and a rebound towards 18,250, 18,300 in today's or tomorrow trading session is what I would be expecting. And for a trade, a long trade initiated around these levels, a stop loss below 18,000 would be recommended. Now, talking about Nifty Bank, now this has been an index which has actually been outperforming for a while now. And after the sharp run-up that we saw last week in the private sector banks led by HDFC Bank, ICICI and Axis Bank, once again, PSU banks have started to offer some kind of support, and we have seen this coming in yesterday's trade also. Now, as far as the levels are concerned, I think 42,100 is an important support to me on the Nifty Bank, where I would like to initiate long positions, keeping a stop loss below 41,950, which was the previous swing low. And mind it, the way the Nifty Bank has actually managed to make new lifetime highs, I think this is one area where the leadership should be coming, and it should be first sector to actually lead this recovery if we see some kind of rebound again. So 42,100 is an entry for Nifty Bank, 41,950 stop loss, and on the upside 42,400, 42,500 are the likely targets that I would be expecting for this value.
Okay, great. Himanshu, I want to also address some of the stocks that could be in the limelight today on back of news flow. Now, Nykaa tops that list. Lighthouse India is looking to sell 320 crore worth of shares in the company via a block deal. Now, around 1.8 crore shares will be at stake here, which will be sold by Lighthouse, and they will be offered at in a range of 180 to 183.5 rupees a piece. Now, Nykaa stock has given up almost 12%, in the last 4-5 sessions alone. Talk to us about the current levels. 183.5 is where the stock shut shop yesterday. What lies ahead? Is there more pain in store for this one?
Oh, well, absolutely. See, there has been no sign of a reversal in the charts whatsoever, and every rally is being shot into from past many weeks and months. Now, if I talk about the immediate important levels, for me, a close below 165 will be the fresh negative trigger on this one. So, if this stock settles or continues to settle below 165 on a closing basis, I think that would be the last thing where I would be willing to throw the towel finally. And I would not seriously advise to hold any long below that level. But in case after this news, the stock still manages to continue to close above that 165 odd levels, then I think it will be a first sign that a lot of negative news is already priced in. And maybe the start actually starts into some kind of consolidation before giving that turnaround or a trend reversal sign.
Okay, all right. In fact, block deals seem to be the flavor of the day. The second stock also could be in focus on back of some fund action. Bluestar is the one I'm talking about. Kotak Mahindra AMC has bought an additional 63,000 odd shares in the company via open market. And they've increased the stake, which was just below that 5% threshold. Now it's gone beyond that. 5.04% is what Kotak Mahindra MF holds in Bluestar now. This stock has been completely range bound last 1 month, despite the positive momentum we've seen in the market, especially in the early part of the month. This one hasn't been able to keep up. Talk to us about where it goes from here on.
So this is a stronger looking chart, a nice setup, already in a strong uptrend, making continuously higher highs and higher lows. And after some brief period of consolidation, as I would see it, I think the stock is once again ready to move up. So from a short-term perspective, I think 1100 is a very strong support zone. And as long as the stock is holding above that 1100 levels on a closing basis, I think every dip should be a buying opportunity. On the upside, the immediate resistance for the stock is around 1250 odd levels. And once the stock actually reclaims that 1250 odd levels, I think you will see new highs coming into this stock. And from a positional perspective, I will not be surprised to see 1400, 1500 targets in the medium term for the Bluestar. Okay.
And finally, the third one also, which could be in the limelight on back of a bulk deal, is Delhivery. Carlyle, its subsidiary CA Swift Investments has offloaded 600 odd crore worth of shares in the company. And at the same time, we have a buyer as well, Morgan Stanley Asia, which has bought about 48.5 lakh shares for 330 apiece. Now, how's Delhivery looking? I mean, clearly a lot of these recently listed stocks, especially from the consumer tech space, are the ones that we would like to highlight. Delhivery being one of them. How are the prospects, especially vis-a-vis Nykaa, Zomato, etc.?
As much as you want to give a positive advice, but the charts are suggesting a different story, and I think it's another example of this reverse compounder. So I think avoid and exit if you have any positions, and I think there will be much more pain that you are likely to see in Delhivery also. So for somebody who actually wishes to buy this one, I think on the technical charts, once this stock actually conquers or reclaims 400 odd levels, it will be only then we will advise to look for any kind of entry or accumulation into this stock. The short-term chart setup is extremely weak, and I think one can expect lower lows coming in Delhivery.
Okay, all right. What about Adani Enterprises? Now, this is one stock which could be very much in the spotlight today, along with NDTV. Why that is because their 493 crores worth of open offer for NDTV will start from today, 22nd November, and it ends on the December 5th. Price band has been fixed at 294 rupees a piece for this acquisition. Now, talk to us about both these stocks actually, NDTV and Adani. Both look hot on the technicals for at least the near term.
Yeah, so first talking about Adani Enterprises, Adani is one stock that has been on some kind of a roller coaster this entire bull run, and last few weeks the stock actually gave first meaningful correction where the stock actually tested its 20 and 50-day exponential moving averages around 3200, and once again from those levels a very sharp run up is already seen in the Adani Enterprises stock. Over the last few days, there has been a consolidation where the stock has been broadly contained within that 4,000, 4,050 on the upside and 3,850, 3,900 on the lower side. Now, on the back of this news, if I were to see a breakout above 4020, 4025 in today's session, I think it will trigger a fresh buy in Adani Enterprises, and we can see a rally towards 4150, 4200 as well in intraday itself. So a fresh buy in Adani Enterprises is recommended above 4020 odd levels, keeping a stop loss below 3980. And now talking about NDTV, I think this stock actually had a very, very huge run up before and after this takeover by the Adani Group. And after this, we have seen a lackluster move. The volumes have also more or less dried up. So for me, Adani, for a trading perspective, of course, Adani Enterprises makes much more sense. But for somebody who is already holding on to NDTV, I think a stop loss on a closing basis below 350 is what I would recommend in NDTV. And one can continue to hold this stock.
Okay. Imanshu, request you to stay on with us. I want to bring on board my colleague Nitin Sharma from MC Pro as well. And we want to throw some light on another stock that's been the talk of the town, and that is Zomato. Nitin, hi. Thank you so much for taking time out. And you track Zomato quite closely. So I wanted to understand how worried should investors be given the slew of high-profile exits that have happened in the company, not just this month, but since, I think, August or so, there have been a lot of senior management exits. How does that augur for the company? Should we be worried about stability on top?
Karunya, happy to be here. Market has reacted negatively on the departure of Mohit Gupta and some other senior employees. To be honest, I do not immediately see a smoking gun that something is wrong with the company based on the information available publicly. And we must remember that this is not the first time that a key employee or a co-founder is leaving the organization. If we remember, in 2018, the co-founder Pankaj Chadda left the company to start a new venture. Another example is the Zomato's IPO phase. Mr. Gaurav Gupta also left the organization right after the IPO. So this is quite common at tech companies globally. We have a very famous and cliche example of Apple co-founder Steve Wozniak, who left the company within the 3 years after the IPO. So in my view, we need to understand that the tech company or internet startup founders are a very different set of people. They are motivated by exciting challenges, building something. And this is in contrast with what happens when a company starts maturing. So these entrepreneurs tend to move out seeking newer challenges. And when you look at the internet platform, they tend to have a lower barriers to entry. So as such, if a co-founder is leaving the organization, may not necessarily mean something bad is about to happen, assuming the transition is smooth and seamless. I would also like to quote another example of a similar business. So if you look at the 12 billion market cap online food delivery business, Delivery Hero, it also saw its co-founder Marcus Furman and Kolja leaving the organization, starting something of their own. And then another example from the same tech space is famous founder of Uber, Travis Kalanick, was forced to resign in 2017. And company went on to do a successful IPO in 2019. Of course, stock is down now, but for other reasons. So I immediately do not see a kind of a problem with this stock.
Okay, all right. What about the overall fundamentals of the company? And Q2 numbers have been steady. Management has been more transparent, more vocal about their quarterly performances, their way forward. They're walking a very tightrope between growth versus margins. And clearly they have flagged off that their focus is now on profitability vis-a-vis growth. By when should we see all of this kicking in? Are they likely to stick to their break-even target of September 23, or could there be some hiccups and some speed bumps on the road to that?
Right. So to begin with, I think the Indian food delivery business is now definitely a duopoly. And if you look at top 6 to 10 cities, it seems some sort of a maturing there. The order size, average order value has kind of stabilized. Discounts or marketing spend has come down, at least in those areas. And other than that, their business of hyper pure is growing very fast. Basically penetrating with their empaneled restaurant. I think it's at 19% of the total food delivery restaurants. So and that part is doing very well. Cost control also looks very good, especially in the last 2 quarters. We've been seeing that steady improvement and control with regards to costs and the marketing spend, which is welcome. Even at the recently acquired Blinkit, the costs are coming down. It appears to be stabilizing. Obviously, it will take some more time to fully stabilize. Management guided that excluding Blinkit, they would be aiming for an EBITDA level break even by FY24. But I think it will still take more time, at least for the hyper pure and other businesses, to reflect a very EBITDA neutral kind of a stance. Including everything, our estimates have come down in terms of the net loss for FY24, but fundamentals are definitely improving. Now, one thing to note here is that that as company been moving toward profitability, growth would definitely decelerate, and which is not a bad thing, because for a tech company or internet platforms, initially they try to have growth, top line growth or order growth at any cost, and now they are moving towards the growth will actually bring in cash. They don't have to spend more to earn less. So from that perspective, it looks interesting, and we tend to be positive. And then finally, we have to understand that at the end of the day, it's logistics business, right?
Yeah.
So there are many more additions that they can do given the large network of delivery partners that they have. And once they hit EBITDA neutral kind of a situation, we expect them to move further and to invest into the newer areas, leveraging the existing capability.
Right.
On our view of Zomato, we believe the focus on profitability is good, and may even be surprised that earlier break even than previously thought. Obviously, at this of course would come at the cost of growth at least at a core food delivery business, but it cannot continue to incur losses for a foreseeable future and remain stable and have a continuous trajectory.
Okay.
We continue to like Zomato, and we think that investors with high risk appetite should hold the stock.
Okay, Nitin, thank you so much for taking us through all of that that's happening at Zomato, and perhaps giving some insight into what investors should also do from here on if they continue to hold it or if they want to enter. Thanks a lot. Himanshu, he's also standing by. Let's again bring him back. Himanshu, wanted to understand your view on Zomato as well. Do you believe that those who have a good risk appetite and who can stay on for at least medium to long term should buy Zomato right now?
Well, I would say there are some early signs on the charts that maybe the worst for the stock is over. But this bet, as you rightly pointed, should not be aimed for a short-term trading perspective, but from a medium to long-term perspective, where an accumulation can be made within a zone of 60 and 55 odd levels, placing a closing basis stop loss below 46, 47. And I think if given a time and once again the momentum is able to take it above 70, 72 odd levels, I think there is a reasonable possibility that the stock might hit 75, 80 targets in 1 year's time frame. So yes, from a positional perspective, the risk reward has started to look in the favor of Zomato.
Okay, let's quickly address some of our viewer comments and queries as well. Vignesh wants your view on Marico, another stock that faces the consumers. Of course, it's a pure play FMCG and not a consumer tech company. But Marico again has been, quite subdued last few weeks. Going forward, is that the trend that one should expect?
Well, from a short-term perspective, I think Marico and a lot of other FMCG stocks are going through a time and a price correction. And particularly talking about Marico, I think there is a reasonable possibility that before getting or starting an upside momentum, the stock might test the medium-term supports, which are close around 425, 430 odd levels. So for somebody who has actually bought it for a short-term trading perspective, I think this is not a stock where one should be right now. But for a long-term perspective, I think 425, 430 are a very long, good support zone where I think one can start accumulation for a long-term perspective.
Okay. Jiffin is writing to us for a view on Avanti Feeds. Now, this one also last 1 month, pretty weak, given up about 70, 75 rupees on the downside. What's the way ahead here?
Well, I think something is not right here. The stock actually started to give a breakout above 500 odd levels in past month. But the way that rally has fizzled out, and more importantly, the way the stock actually broke its important support of 450, 460 odd levels, I think there is some negative news which is likely to be, or some negative development which is being discounted by the charts. Once the stock actually closes below 375, 380 odd levels, I think there can be a massive sell-off in the stock. So I think strictly keep a stop loss of 380 on a closing basis, and fresh buying in the stock is, I would say, avoid.
Okay. Very quickly then, one more query that I can accommodate. Amit has asked us if they should enter Mindtree at the current levels. Now, Mindtree, quite interesting trajectory, last 3-4 weeks. It did spike a fair bit, but wasn't able to hold on to those gains. What do you think is the way forward now for this one? Is it likely to stay, range bound in that zone, or could it again see a bounce back?
So one thing before specifically commenting about on Mindtree, entire IT stock in tandem gave a first meaningful rebound in entire 1 or 2 quarters in lines with the Nasdaq recovery that we saw. And particularly talking about Mindtree, most of the IT stocks have actually reached their immediate resistance zone, where some kind of profit booking is again starting to see witness in the most of them charts. So Mindtree, I think I would not say the worst is over as of now. But having said, I think a significant amount of price correction is already witnessed in the counter. And for me, I think levels close to 3,000 odd levels are a very important support zone now onwards. And any dip towards those levels should be an opportunity to enter into this stock. And from an immediate perspective, I do not see any sharp momentum in Mindtree. And I would expect some kind of consolidation between 3,400 and 3,000 odd levels over next couple of weeks.
Okay, all right. What about your own personal favorites in the market right now? What are the stocks that you want to flag off for our viewers? Yeah,
sure. So within an environment where the breadth has not been very positive for last few days and significant follow-up is missing, I could only get a handful of stocks that are showing very good relative strength, and I think that can actually outperform if in case we see some kind of recovery in the broader markets. So the first one to top on the charts is Bharti Airtel, which is on a very strong weekly, monthly and quarterly breakouts. And I think we are continuously seeing higher highs, higher lows in this stock. So Bharti Airtel can be bought around current levels for a target price of 875, 880 for the very near term. Keep a stop loss below 844 for a trading bet for a short-term trading position. The second one is a buy on IndusInd Bank. Now, amidst this outperformance and the sharp rally in the entire PSU private sector banks, IndusInd Bank has been under some kind of consolidation over past few weeks. And yesterday, for the very first time, the stock has shown some kind of rebound from its important support zone, which was placed around 1120, 25 odd levels. So I would expect a follow-up buying in IndusInd Bank around current levels. So one can initiate longs here for a target price of 1165 and 1175 and keep a stop loss below 1128 for a short-term trading position.
Okay, great. Thank you so much, Himanshu, for taking time out, talking to us about a host of stocks, the benchmark index, and what to expect as far as the expiry is concerned. With that, it's a wrap on Morning Trade. Thank you for tuning in. But stay tuned with Money Control because Markets with Santo and CJ comes up next.